Okay, today is September 10, 2015. I thought I'd do a little video and kind of explain some of the setup that I kind of posted on Apple earlier today during the trading session. And I posted this chart and talk about possible trade setup. At the time when I posted, I didn't have any position on it. Whether I traded this stock or not, that's not the matter. So, but anyway, let's go to some of the trade setup. And maybe for a lot of you experienced trader, this might be a little bit academic, and it might not be even be suitable for you because you might have your own style of trading. But for some of the newer trader, just kind of highlight some some of the pointers here and there, and maybe that will give you some idea of what are some of the discipline that we try to instill in ourselves when we do trade these various setup, and also some of the pitfall to try to avoid that kind of stuff. So it's kind of give you a little bit heads up, and also some perspective of things to look at. It's not just like some of these people just throw out entry and exit, right? It's all about discipline, the process, okay, of trading. Okay, so let's take a look at the Apple here. It's just a 5-minute intraday chart. You can see that Apple kind of opened with a little bit of a spinning top, indecision type of a candle in the first 5 minutes, and then it ran up. You don't want to chase this. I know somebody, some of these people chase or trade the first 5-minute bar, so, but if they did, then they probably went short on it because it went below the opening low on the first 5-minute bar. But usually if it's come up, and if it hit the high, then you go on a high. But in this case, that's not what we're playing at least that's not what I was looking at. And you can see that it ran up and then also followed through with another candle. These are all 5-minute candle, and here putting out a little bit of a shooting star type of candle, right? Inverted hammer and that sort of thing. Right, so here, so you can see that a pullback is imminent, because when you usually see a candle like that, or at least when I see a candle like that, I usually see some kind of price retracement at least a little bit before it resume in the up the direction here. So you can see that it's coming down, and it came down pretty orderly in a fashion in which form a nice little flag here. So this could look like a bull flag, right? And so right now, essentially, it's basically looking for a breakout of this bull flag, and you can see here's that break here. Okay, so you can set your entry anywhere above maybe this level here, a few penny or whatever that you decide to use to trigger a buy order and get yourself in. Then the typical stop would be somewhere beneath this particular candle's low. Although some aggressive player might want to just find somewhere below this particular high here, this candle here, because if it's not a true breakout of this flag, then it will retrace back into this channel. Then you don't want to take that risk. So it's all depend how aggressive you are and how risk averse your trading plans are. So those are some of the area that you could establish your particular stop there. Okay, so as you can see that it kind of do a little bit of a shake and bake, right? If we get in here, probably spooked you a little bit, when it came down, after this candle, and it came below your entry level. Okay, so you just have to stand firm, and if you got your stop, let your stop get hit, so to tell you the trade is not working. Okay, if your stop is here or if your stop is here. Okay, so as you can see that after a little shake and bake, and it start to run up, and these are very nice run up. You can see all these 1, 2, 3, 4, 5 successive green candle. Then you hit another shooting star here. Okay, so the other thing is when we do a bull flag, we do a major move, right? So I use the Fibonacci extension tool to set up the to use it as a major move. So you can see, all right, this is the flagpole. Okay, let me go and do this. Right, so this is the flagpole. All right, so this is the flag here, and then we essentially take this flagpole and then do a major move, project that up, and here's that 100%. So essentially, this distance is equal to this distance here. So we kind of project this to about 112.59. Okay, that's a 100% move, and usually, you don't want to wait until 100% price target get hit. Also, I have set a 78.6, one of the Fibonacci ratio. Right, so it's essentially it's close, close enough to that 80% level, because a lot of people basically trade off the Fibonacci levels. So if you set this at 80, then sometimes you might not, that the price might not hit that 80, and then we'll discuss that when we get to that point. Okay, later on. So you can see that right here, once you get up to this 78.6, I usually, if I trade this, I usually, put a stop here and scale out some profit, and regardless how strong it is, right? Because I'm not going to wait. Going to take some money off the table and at least book some profit. And also the other thing is I usually put the sell limit, the limit order, maybe a few penny below this level here, because there's a lot of people waiting for trying to get out of this level as well, and most of them also trying to get out a little bit early, right? Because they know there's a lot of people trying to sell at that level. Okay, so you might want to just put a few penny away from that level, put a limit order on there, so when it hit, you get your order filled. Okay, then if you decide to keep a portion of it, then let it run. All right, so for example, in this case, it ran up, hit the 100% target level, and you might want to consider scaling a little bit out, or you could just see how far it could run. Maybe it could run up to this 127 extension, right, to that 113. One never know, because there's time that it could just run up, and there are time that it could run further up to 147 or 1618. Extension. So, but the thing is, you basically have to start watching this candle, this kind of action, to see what sort of a trade exit you might want to take, or how you move your stop and that sort of thing to manage your trade. Okay, so once you get up here, let's say you did not take any profit at here, at this 100% level, but definitely when it retraces back below this low, or even below the close of this candle, because it kind of tell you that this is like a little bit of a topping candle. Remember we were talking about here, right? This is a little bit of a topping candle, then there's a good possibility you're going to pull back. Right? I'm not saying every time it does it, but most of the time it's going to have a little bit of a pullback. So you might want to put a stop either anywhere between this level here. So definitely you want to get out and take your profit and exit your trade out at this level. And if it run up again, you can always find another entry level, and so go back and set up another trade. So in this case, it pulled back. And here again, set up a little flag, so it's kind of nice orderly pullback. In addition to that, you can also draw a trend line up here. It seems to be, kind of holding this trend line. Now you got a trend line for you to see, if the price be able to hold that trend line. Okay, so again, you got this little flag here, and you could set your, entry. Put a stop by, a buy stop order in here, maybe a few cents, so once to get up there, then to trigger your order and get it filled. All right, so you could get that and move up, and you can see that it also came up pretty nicely after it broke out of this channel here, this flag. Okay, then again, I use the Fibonacci extension tool to set up this this major move. Right, so now the major move is essentially this is the pole of this flag now. So if I use this and project up to 100% level, then essentially it is 113.78. Okay, and then the 78.6 is 113.35. All right, So if you can look, you can see that this one here is not as strong as this move here, okay? Because you see this move is, you know, nice and strong, 5 consecutive green candle. But you can look at this one here. Once we get this candle up, and all of a sudden we have a little bit of a spinning top type of a doji candle, and essentially it's a inside bar here, right? Okay, so that's gonna stall a little bit, and then follow on. If the next candle is actually a you know, red candle, and it came down, still, you know, it is within that inside bar area, right? Okay, so we're basically looking for a breakout of this, you know, this coil, okay? But the other thing is, if we look at here, this level here, this low of this candle is 112.15, and the low of this candle is also 112.15. So essentially, you got this level here. It seems like there's a 112.15 support here, right? Let me see, is that 112.15, and this is also 112.15. Just want to make sure that we get the right number. So you can see that it's kind of stalled here, but if you came, you know, if you got in here, right, okay, then, you know, most likely you could put your stop here for the aggressive player, or you could use it down here, you know, this, you know, a couple penny below this low here as your stop. So it all depends. All right, but still, you know, once you get a stall like this, once you get up here, if you didn't take any profit, which, you know, I usually don't take profit at this level here, I'm gonna let it run for a little bit. But at least when it came up and showed me this kind of stuff here, yeah, I'm gonna tighten up my stop, right, to a break-even level, right? All right, so if I get hit, I would rather just forfeit this trade. At least I'm not going to move, you know, say lose any money, because right now, you know, this right here doesn't look that strong to me, right? Although we could say here's a little bit of a triangle, so that might get a little bit of a flag here to get this thing up, you know, maybe to this level, okay? I don't like flag on top of a flag. Right, it just kind of shows a sign of weakness. So I would rather just put a stop here, and that's why I put down here to say, look, both flags look a little bit toppy, should be worst case break even, right? Okay, so as it turned out, you know, even if we put a stop here, or, you know, you break even, you know, you might get stop out and you might not. Right? If you didn't get stop out, it came up, hit that 50%, made a new high of the day, right? Okay, so you got a new high of the day, and again, you know, your break even is still down here, so you're still okay, right? You know, so if you didn't take any profit here, you're still okay. All right, then you basically just have to sweat it out for a little while, and then it finally came and book, you know, book out of it. This little consolidation, and at one time it was actually trying to form a head and shoulder pattern, and that's why I said, you know, if it break below this level, if it come back down and break below this level here, then you would have a you know, have formed a sort of a like a head and shoulder pattern here, right? Then we'd be basically coming back down. So that's why, you know, we want to put a break-even stop here. So if it does come down, then the worst at is you know, just lose a little bit of a commission for that trade, and that's it. Right? So as it turned out, it made its move, came up, and again it shoot up and kind of gave you a little bit of a doji, spinning top doji candle, shooting star here. So again, if you look at here, if we take a look at here, the high of this candle, okay, is 113.28, right, and this is 113.35, right? That's about 7 penny, 7 cents away from this major move level, that's 78.6 extension. So if, you know, even though if you put it in 5 cents away from this, you probably won't get fill. Right? So again, you know, you have to look at this candle and you determine, are you going to take profit here once it come down? You know, maybe take a little partial, okay, or, you know, and then if it go further, you know, pull back a little bit more, then you just exit out, okay, or you just exit, right? I mean, you know, just take your profit and you know, take that trade off, you know, even when it dip back below this level here, or dip back below the close, you know, the low. So those are the level that you should have taking some profit, if not exit out of the trade, because then it will alleviate you a lot of pain and anxiety when it pull back here, okay, because this could have been coming back down, right? But as it turned out, it's still kind of chop around during the afternoon session toward the close, so it's still not a very comfortable situation to be. Now tomorrow maybe got this little bit of a bigger bull flag here, maybe it will make a bigger move up, but that will be another trade. Okay, so the key things to watch, right, on these a lot of these day trade, right, is these topping candle, because usually these topping candle will give you a little bit of a pullback. Okay, and when you get a little stall here, right, tighten up your stop so you won't lose too much money. You don't want to wait until it hits your regular stop here and take the full the full risk. Okay, you just want to tighten up, so because you gave it a shot and it doesn't look like it's moving the way that you wanted to see it move, like here or like here, right? Then why take the chance? Okay, so that's basically Apple. And then the other one is Facebook. Right? I put out this chart here when Facebook just when I was actually joined this, Facebook was still down here. As I start making all these annotations, then it start breaking out. So as soon as I post, this candle is already like halfway up. Okay, so I mean that's how fast this thing broke when it decided to break. Okay. So you see that what I was basically putting this thing up on was the this cup and handle here, and with this breakout. And again, we see that using the Fibonacci extension tool, we could do a major move, and basically on a cup and handle, we just measure this distance and then project this thing up here. Right, so you see this 100% move is 92.3, and the 78.6 close to 80% is 92.02. Now what I also did is I said, this thing is close to this particular resistance level, this pivot high here. So I'm going to shoot at this guy here, because there's a lot of people that might want to sell when they get back up here. Okay, so you can see that again, this is like the Apple bull flag move. As soon as it break out, you look at the surge, and it didn't take too long. It's just this 5-minute bar, 20 minutes, and it came up here to the 618 to the 91.6. Then you got a little bit of a pullback, kind of like a little flag here. All right, so again, I mean, you could take this trade, it's just that you have to manage it, okay, on this this bull flag trade. If you didn't catch this cup and handle breakout, okay, because it's like the Apple, you got this little pullback here, all right, okay. So, but anyway, we're just going to focus on this cup and handle trade here. So as you can see that you got again, this sort of like a shooting star topping candle again. Remember what I said on the Apple chart that we just looked at? Pay attention to these candles, all right, okay. So, don't just go and say, nah, what the hell the candle would tell me. Well, believe it or not, it tells you a whole lot, okay? So when you see a candle like this, be prepared for a pullback, at least some sort of profit taking, because what this type of candle tell you is that, the buyer pushed it up and it got exhausted, then the seller took it down and the buyer could not bring it back up. So the seller is in control by the time this candle is printed. Okay, so the chances are if the seller is in control, at the end of this candle, most likely it's going to still remain in control at the beginning of the next candle, right? Okay, so you just have to give some respect to these type of candle. That's basically what I'm trying to say. Okay, so you can see that on this candle here, the high is 91.96, and what is the pivot high level? 91.98, 2 cents before that target here, right? Okay, now if you were to wait until the 78.6, you have to sweat through this entire mess here. Okay, and I'm not sure as a day trader you want to sit through this mess. Okay, because I would have exited out long before I get to this mess here, because it's just not worth the risk. Okay, so again, if you set your let's say for example you're scaling out some and you set some initial profit taking a target, then you would set maybe a few penny below this particular target level, which is 91.98. Then your order might got filled and you got taken out on some of the position. If it's not a full position, then the remaining position you could leave on and maybe try for this 100% move. All right, but again, when you see these topping candle, the worst is, as soon as you get below the low, okay, you want, or you should consider seriously closing out your position or take another portion out. So you just leave a very small size on, and as it's stepping down, then you just take, close out this the trade. Otherwise, you don't want to come down here and give back, majority of your gain. Right? Okay, sure, yeah, look, if I held it, it would have came back up and, got to this target. Yeah, how often will that happen? Right? Why take the risk? Okay, because you're not gonna, you're taking a risk to gain this little bit more by, holding out, by not taking it out here or by not taking it out here. I mean, it just doesn't make sense, right, in terms of risk management. Okay, so there you have it. That's basically what this whole trade is about, and hopefully, some of the stuff that I presented might be useful to you, or at least maybe give you a little bit of ideas of how to incorporate that into your trading plan, or it might not be, right? And just use it as an entertainment purposes. Okay, good night, and good luck to you tomorrow.